Brett King, thank you very much for joining us. So the future of banking looks bleak or very exciting depending where you stand or where you sit. And you sit in a very exciting place. Tell us more about it.
So, I'm a founder of a startup in New York called Moven, and we peg ourselves as the world's first downloadable bank account. So you download the app, you sign up in the app, and that's how you open the account. And the account configures itself in real time, giving you advice on how to save money, and then it helps you save money and can give you credit, contextually based when you need. So it replaces 5 different products: a current account, a savings account, a credit card, an overdraft, and fixed deposit, all with a real-time mobile-based bank account.
Right. And how does the regulator view this?
So, we have a very good relationship with the regulator because we are the only bank account in the United States that's designed to help you save money, right? If you look at every other bank in the world today, they promote spending, and you spend more, you get more rewards. So the relationship we have with the regulator is really about financial health and the fact that a smart bank account can help you save money. So we've had a good relationship. We have actually never had an issue with the regulator, to the point where one regulator in the US, the CFPB, the Consumer Finance Protection Bureau, said, if any of the other regulators give you trouble, let us know, we'll help you.
Right. And what's the response been like?
So we have, by the end of this year, we'll have a couple of million customers in 3 countries. We're in the US, Canada now. We just launched with TD Bank in Canada, and we have Westpac in New Zealand. The response has been very good. We're working with a bunch of other banks to deploy this as well around the world. But
so you have a bank sitting on top of the... Okay.
So we have a bank partner in the US. We're a program manager in the United States. So we go direct to consumer. We have a couple 100,000 users in the US, direct to consumer there. But we do this through bank partnerships.
So what does this fundamentally say about the way customers are interacting with banks, and what customers expect from banks and what it could be?
So 2015 was a record year for decline in branch activity, both in terms of transactional activity, in terms of revenue in the branch, in terms of number of visits to the branch, and the decline in branch numbers globally. So what we know now is that millennials, the digital natives, that generation, they don't use bank branches. So if you're a bank today, you can't acquire millennials through a branch. So they are starting to seek other ways of getting access to banking, and they don't have a universal banking relationship that's traditional. So this is a real shift. So most banks today don't know how to deliver revenue outside of a bank branch without a signature on a piece of paper. And banks that don't have that ability to deliver revenue in real time through a mobile will really be in trouble in the next few years.
Right. So you said millennials are a big target segment for this kind of product, but is this universal? I mean, do millennials maybe in all of the Western world or elsewhere behave the same way in your experience?
So we see it, whether it's developed economies or developing economies. Essentially the way millennials will hear of a bank account or research a bank account is predominantly through their phone. Right? So, and they will have a higher element of trust if their friends recommend it. So in terms of money movement, for example, in China, Alipay and WeChat and QQ are much stronger money movement platforms than the banking ecosystem for millennials. In Kenya, it's M-Pesa. In the United States, it's Venmo. So it doesn't matter where you go in the world, mobile is the dominant form factor for millennials when it comes to money movement, payments, and banking.
Right. So how do you see the disruption happening here? I mean, you are obviously working with the big banks, like you said. You mentioned TD Bank being one, and maybe accessing markets they couldn't access earlier. Well, how is this going to play out? Is this going to put pressure on new players, existing players? Do you see a shake-up?
Sure. So we are 5-6 weeks into the new year, and we've already seen $7 billion of investment in fintech in just the last few weeks. So we're looking at record investment in fintech. We have 25,000 fintech companies globally, something like 60 unicorns, fintech unicorns now valued at over $1 billion. For bankers to assume that this explosion in financial technology and these hundreds of billions of dollars of investment in fintech won't have an impact on their market share is ludicrous, right? So we're starting to see the world divided up into two spheres, right? Those who are technology oriented in banking and those who aren't. Right? And the winners will be those who have invested in technology, whether that's fintechs or banks that work with fintechs. They're sort of
Right, but when you say 25,000 fintech companies, that sounds like a bubble of its own making, though it may not affect this part of the world.
Yeah, but even if you just look at the United States, the United States is a $2.6 trillion deposit market. So to say that there was $7 billion of investment in fintechs in New York last year, to say that's a bubble when you've got a $2.6 trillion deposit market really doesn't make a lot of sense. I mean, the banking sector is so huge that until we're talking trillions of dollars of investment, I don't think you can really call it a bubble. I do think, just like we saw with the dot-com phenomenon, that you will have a shift at some point where real revenue and real metrics will replace the metrics that we've seen in terms of just user growth and things like that. So and investment. So I do think there'll be a maturing of the fintech space, but don't put your hope in the fact the bubble will burst and fintechs will go away, because we know how that worked with the internet, right?
Right. So what's if I were to ask you to look at the next year or 2016-17, what are the 2 or 3 mega trends or big trends that you see in the space that you're operating, and how could it influence banking and banking relationships?
Sure. So this year will undoubtedly be the year of blockchain. There's a ton of investment in blockchain. But in terms of deep learning, machine learning, investment in artificial intelligence and data science is also in parallel growing very, very rapidly. But the thing that I think is exciting me more is we are starting to see new experience-based banking initiatives every day starting up. And we've only just touch the surface of the innovation of day-to-day banking experiences that we're starting to see. So I think they're sort of the big 3 areas of disruption. But I just keep coming back to that core piece, which is if you today need a signature on a piece of paper as a bank, you are in trouble. If you haven't figured that out already this year, you are going to start to see a decline in your business. And we see brands like HSBC who really are suffering from that right now. I think they're probably going to be globally the first victim of this digital revolution breaking up their retail bank. You heard that prediction first here, right?
Right. Oh, so anyway, thank you very much, Brett, and I hope the Indian regulators are also listening, and we too have a more seamless and fun banking experience.
One message for the Indian regulators. Forget this 25% of branches in rural India for onboarding. You have to be able to onboard customers digitally, and that's what the Aadhaar card can enable you to do. So forget branches, go digital.
Right. Thank you, Brett. Thank you very much.
Thank you.